Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome back, everyone, to another episode of Real Estate 360 Live. I'm your host, Ryan Sloper. For those of you not familiar with the program, my guest and I will cover all angles of real estate, from interest rates to the economy to what's happening in Washington. Anything that affects you and your real estate decisions will be covered here. We will talk about things more from a macroeconomic, standpoint. We're not going to just dive into our home sales up or down, whether interest rates are up or down. We're going to, dive deeper into the meaning behind all of this information. We're going to break down these headlines, which is, for the most part, which everybody reads, and doesn't typically, take a step further to actually question what the national media is putting out there. Hope everybody had a great Thanksgiving. We're doing the show on a Monday versus normally we do it at the end of the week. We do have tons of topics to cover, including the miserable holiday retail sales number, which is quite interesting because that kind of tells us exactly where we are as an economy. Everybody keeps claiming and touting that we're, on our way up. But I think as that retail sales number shows, we're actually moving further and further the way down. That is the middle class that we've talked about for some time now is being obliterated. So we'll dive deeper into that. We'll also talk about the gold issue and the Swiss vote. I actually voted no on that. And, Louis, you are the expert on gold and silver, so I'll let you dive deeper into that. Joining me on our panel, as he does each and every week, is Louis Camrosano. Louis, how you doing today?
Doing grand, Ryan. How are you?
I'm doing well, sir. Good to have you back
Excellent.
on. I hope you're all rested up from the little mini vacation we had there. And now we are back to ground zero. I guess, as I mentioned, I think that one of the places we should start, just because it is talked about so heavily, is the holiday sales, right? We typically have Black Friday, which now turned into Thanksgiving Thursday, right, where all these deals are taking place and trying to create this frenzy that would hopefully drive sales higher. Well, it actually didn't do that. And we actually have some of the numbers which are reported by the National Retail Federation, which is traditionally a very optimistic and positive industry organization, right? They normally can find the light in any dark. And they reported that the sales during the 4-day Thanksgiving holiday period crashed by a whopping 11%, $57.4 billion to $50.9 billion, which in the article listed on Zero Hedge, retail disaster holiday sales cratered by 11%. And in there they mentioned that this is confirming what everybody knows, that the U.S. middle class is being obliterated. Very interesting here. They say that the average shopper spent only $380.95, which is down 6.4%, $407.02 earlier. But everybody was banking on this being a great number, right, Louis? We've got, oil prices, which translate to gas prices being lower. We have a more stable job market, as they keep claiming, which you and I have been calling BS on the whole time. More part-time workers to the market, nobody paying attention to the people that have fallen off and no longer looking for jobs, which has been going on for years now. We've had a low interest rate environment for 6+ years, really. I mean, there's no end in sight for the Fed to raise interest rates. They really can't, as we've talked about, mainly because they can't even afford to pay back the debt at higher interest rate levels. I want to get your take, Louis, on these retail sales numbers. Not that we're shocked, because we've been talking about this for some time now, that the economy is not stable at all. It's getting worse. And, some of the deals that were actually put out there this past Thursday and Friday, you would think that would actually give you some sort of temporary spike. But they can't even muster up a temporary spike in sales over Thursday and Friday of the holiday weekend. Where in the world do they think that we're headed for next year?
Okay, Ryan. Well, first of all, an economy that's based on retail sales is already a loser. If you got to count on people breaking doors down and doing the real tough stuff of going out and buying things, and they can't even do that because they're broke or they don't have enough credit, that's a sad story. Because 70% of the U.S. GDP is based on consumer spending. The whole economy is based on the almighty dollar, and people want our dollars, so they're going to make stuff, ship it over here for those dollars, and then we're going to get our American citizens, the mighty consumer, and they're going to go out and they're going to Walmart and Target and everywhere else, and they're going to buy stuff. Well, they couldn't even do that, off 11%. What was most intriguing, though, Ryan, was not just that the numbers were down. Of course they're down. People don't have money, despite what the media says about a recovery, robust jobs, and all the nonsense that you hear. But the way they spun it was they gave all manner of excuses. One of them was, it's a sign of a good economy. Why? Well, when things are this good, people don't need to go out and get bargains.
Right.
They just, they stayed home because they're happy. They've been buying all year. They don't need to go out and get a bargain, which is 100% nonsense. Kudos for them to come up with that kind of nonsense. Then they're talking about, well, we had, things were open on Thanksgiving too, so that's why Black Friday was down. Yeah, but if you add the two numbers together, they were still down. Then you hear about maybe it was the weather. Well, it's only 2 days of data. We don't want to read too much into it. P.S. That's exactly what you have to read into. Those are the 2 days that everybody hangs their hat on. They're saying they don't want to read too much into it. Yeah, because they don't like the numbers. The sales for those 2 days were weak. They were weak from 11% down from last year, which wasn't a great year. But this year is supposed to be even more robust recovery. Why? Well, the Fed has finally exited QE, and they're going to raise interest rate because the economy is going up. And look at everybody else, Europe and Japan. They're in shambles. They have deflation. They've got to do QE. Come on. The whole thing is nonsense. The United States is in no better position than anyone else. The consumer is just as strapped, just as indebted, just as unable to buy as anywhere else. And the only thing that's going to fix that temporarily is the Fed is going to have to turn around and turn on the QE again. Because they can't allow, look at oil. All the commodity prices are down. They are getting what they don't want, which is deflation. And the only way the Fed knows how to fight deflation is by printing money. And there's no way they're going to let this strong dollar allow the United States dollar to get so strong that it experiences deflation when they're trying to get a 2% inflation target. So they'll come back in a few weeks or next year, not a few weeks, next year in a few months, and talk about the unexpected economic slowdown, the unexpected deflation that we have in the economy, and you'll hear yelling, talk, and people falling asleep. But the main thing she'll say is highly accommodative monetary policy is necessary. And then it'll be back off to the races with the stock market. It won't help the economy, but the stock market will continue to go higher.
Yeah, it's really is amazing. We keep ending up in the same spot every 6 months to a year, right? Where we really do. It's utterly predictable at this point. Interesting the way you brought up, especially when they spun the whole retail sales thing. So that NRF CEO Matt Shea, his exact words were, people don't feel the same psychological need to rush out and get the great deal that weekend, particularly if they expect it to be more deals. And then he further went on to say a highly competitive environment, early promotions, and the ability to shop 24/7 online all contributed to the shift witnessed this weekend. That's fantastic, but, we still know that online sales make up a very small percentage of total retail sales anyway. Even though everybody thinks that, everybody's buying online, it's still not the case. It's probably only 10 to 15% of the total market. So that's a lame excuse. And, you would think that any bump that you might get with lower gas prices, they would free up some cash for people to be able to spend more money. But what this really tells, Lewis, is that the money that people would typically spend, so the 70% of the overall economy that is consumer spending, is debt spending, right? It's money that's on credit cards. This isn't cash flow that's available for people. They don't just have money sitting in their checking and savings that they're going to go run out and buy their Christmas gifts with, right? They're use their credit cards, and guess what? It tells me that their credit cards are tapped. They can't borrow any more money to buy the gifts because because everybody knows, especially with a holiday frenzy, that anybody will go to any length to go and buy gifts, especially bargains for their kids, for friends, family members, neighbors, whoever it may be. If they feel like they're getting a deal and they have their last $200 on their credit card, they're going to spend it. They're going to spend it. And the fact of the matter is, there's just not that credit available to people right now. And that tells you that we've moved in even further downward spiral, because if you remember when we talked on the show a while back, we talked about how readily available credit was at a point in time where they were giving credit cards to people that probably didn't even deserve them at very high interest rates, right? Well, now we're about 6 months to 12 months down the road where a lot of this credit was made available. Now people can't even pay their minimum payments back, and they're stuck trying to figure out what they're going to do. Well, we're in a position now where what's going to start to happen? More defaults. Everybody's worried about actually just like defaults on houses and things of that nature, but we're right back in the same boat. Student loans. We're right back into credit cards. We're
car payments.
Correct. All of these things are going to
higher insurance premiums. They don't want to mention those are the reasons. You just mentioned them. Consumer credit tapped out, car payments, higher insurance premiums, lower wages, part-time jobs. That's why people can't spend the money, not because the economy is so good. They don't feel the need to go out and get bargains.
Yeah, and we go back to real estate, Lewis. I mean, so we can't even get to real estate because we've now talked about the student loans, the auto loans, the health insurance, right? We have all these things.
Add those up, Ryan, and they equate to what used to be a traditional mortgage payment number.
It's not
if you take $800 or $900 for your monthly family of four insurance payment, you take a $400 or $500 car payment, you take a minimum credit card payment, add that up, and you're at an $1,800 range, which used to be what your mortgage should be.
Right.
Well, if you already got a mortgage, you can't get another one to buy a house.
Right. And so you basically, the disposable income at this point is non-existent, which is interesting because, and I talked about this with you a lot, Lewis, is that when you're going to shop for a mortgage, one of the things that they don't even consider is what the benefits that come out of your paycheck, meaning your health insurance. So let's just assume that, you get paid $5,000 a month and $1,000 comes out right off the top for health insurance, okay? They don't even factor that into your qualifying ratios. Now, why wouldn't they? Why wouldn't it make sense for them to do that? Because that's 20% of your income that's basically out the window, right? But they don't even calculate that. It's off of gross income. If it's money that comes out into your 401k, if it's money that goes out to your health insurance or any other benefits.
But you pay your mortgage out of net income, so that's stupid.
It's stupid, right? But think about this, though. So if people are now taking mortgages and they're still not accounting for health insurance, they're still not accounting for any other benefits that are coming out of people's paychecks, this tells me that they're basically lending mortgages to people whose total debt-to-income ratio, their back-end ratio, is probably in the 60 to 70% range, Lewis.
Right. It's much higher than they're reporting, which means they're much more likely to default than their models might indicate, because their models are based on a lower debt-to-income ratio because they're not including those numbers.
But
it's not going to be any surprise to you or me when there's larger defaults because we realize, they can't pay their mortgage because they're not paying it off of gross income. They're paying it off of net income, which is a lot lower.
Right. And everybody's the economists and all these guys that are out here looking at real estate, and they're just not. They can't fathom why stuff's slowing down with interest rate levels is where they're at.
No, they don't even think. Sometimes they question. They don't understand why it's slowing down. But others, the real cheerleaders, say it's not even slowing down. It's just starting to pick up because of the robust jobs and the roaring economy.
Right. And now we have the psychological factor that people can sit back and don't feel the rush to go out and buy real estate or any goods at stores because, you know what, they're in a great position and they can just sit back and wait for the deal to come to them. It's just
they can make up. It's up is down, black is white, lie is truth. It's unbelievable, Ryan. It's almost like what we as kids used to make fun of Russian newspaper TASS propaganda.
Right.
So you don't even see a whiff of even any truth in some of these spins that they put out.
Yeah,
you don't have to be 100% negative. And the only reason we're so negative is because we have to put out the facts and figures that they don't even gloss over. They don't even mention them.
Right. When
they talk about job growth, like just for example, for our listeners, when they talk about job growth, it's part-time jobs. They don't mention that. And it's all in the 55 year and older age bracket.
Right.
People would be shocked to learn that.
And the reason
And it's not like it's not in the BLS, the Bureau of Labor Statistics numbers. It's right there for everyone to see, for reporters to look at. That's not what the headline says. That's not what the first paragraph says. That's not what the entire story even mentions.
Right. And the reason why it's over 55, that demographic, are taking these part-time jobs is because they're forced to, because anybody that was nearing retirement age and or maybe has one job, they might need a second job because they can't make any money having their money in a checking savings account, which is what most people banked on for a long period of time, was to make
for retirement, right?
Yeah, keep money in a bank account at a CD rate maybe for 5 years and make 3 to 5%. They could live off of that, but now they're getting 0 or close to 1%, whatever it may be, and they're forced into the stock market. If they really want to not work and they want to try to make money, they have to put it into basically stocks, right? They have to put it into those to try and make the return to keep that nest egg from dwindling. I have numerous examples of people that I talk to on a daily basis. They're like, "What am I going to do?" And I'm like, honestly, you're in a no-win situation here. Probably go back to work is going to be the only answer for you, because unless you're willing to take the risk, which, as you know, Lewis, I mean, this stock market is extremely volatile. It's probably at one of its highest peaks since the big tech bubble, right?
Based on nothing, though. And at least there was exuberance in the tech bubble that somehow the internet was going to change the world, even though there were no earnings. Now, they're not saying anything's going to happen. They're just saying stocks are higher because they're higher, and the economy is getting better, but there's no correlation between the low and poor performing economy and the roaring stock market.
Well, and what's interesting, too, is that we've always talked about this, Lewis. I mean, we had we'll dive and kind of switch gears here, but we've got other countries that are what many people consider to be in worse shape than we are. Now, one could argue that we're in the worst shape of all, because this is just a complete mirage as to what's taking place. We have the Wizard of Oz in the Federal Reserve who is manipulating, and now we basically have the ECB and some other central banks that are probably going to come in and start doing QE as well. We've got this Keynesian theory out there that we should just keep doing QE. We're not doing enough of it, and that's why we're not getting results, which we know to be crap, but that's what many believe, right? So you can continue to peddle this stuff, and people buy into it. And, Wall Street doesn't have a choice but to buy into it, Lewis.
Right.
We talked about this. They don't have a choice. What is their option? To sell off everything? No, they don't want to do that. They're going to run this thing as high as they possibly can until one day it just busts wide open. Now, China and a bunch of other countries that are buying, our treasuries, they're buying our debt. At some point, they're going to want more money. They're going to want more interest on their money. They're not going to just keep putting it here. Yeah, it's considered the safe haven for money right now, because we're considered to be the, I guess, where the less bad off. I don't even know what the word is, because everybody else is struggling just as much as we are. But we've just had the printing press going for so long, and our headlines read. We stopped our printing press, and they started it, so everyone's forgotten about the reckless 6-year behavior of printing $4 trillion, and they're focusing on the reckless behavior of the Japanese and the Europeans, and saying, well, in contrast, the U.S. is the U.S. Central Bank, the Federal Reserve, is the prudent bank, and therefore we're going to buy dollars and reward them for their prudence. Yeah, well, it's funny is we actually haven't stopped. It's like rewarding Charles Manson for his lack of criminality because he's in jail now. Well, the funny thing is everybody thinks that we've stopped buying mortgage-backed securities, the whole program that the Fed said that they're done with. They've actually continued buying them. I just had an article the other day that actually showed that they're still purchasing agency MBSs and Treasury purchases until the end of this year. And they're also reinvesting the last 6 years' worth of QE bonds that they bought from the U.S. government. They're rolling over principal and reinvesting the interest in U.S. Treasuries. So they haven't released a number. I'm sure you can find it if you look for it, but they're still putting an enormous amount of money back into the Treasuries and, as you mentioned, the mortgage-backed securities. Well, it actually shows. They have a partial schedule that shows 12/1/2014. 11:15 to 11:45 Eastern Time. Fannie Mae 3.5 coupon, $675 million purchase amount. So what they're actually saying is that this is ridiculous. They're only allowed to buy from a select few brokers, and basically what these brokers are doing is finding exactly what they need and selling it to them ahead of time, right? So they know exactly what they're going to be buying. They're basically front-running the Fed's mortgage-backed security program, right? And, I mean, this is supposed to go through the end of this year, but it just tells you the masterful manipulation. I mean, there's the banks are borrowing money at next to nothing. They're not lending the cash to the general public. It's manipulation back and forth between the Fed and the banks. The uber rich are getting richer. The middle class is being suppressed. We've talked about this for some time. Obviously, there is no middle class at this point. They can't even afford to run out for Black Friday and or on Thanksgiving to get a TV, right? They can't afford to do it. And, you know, we're looked at as our economy is turning the corner. It's a load of crap. I mean, I wish I could sit here and we could tell our listeners, Louis, that I feel like this is moving in the right direction. Now, granted, we do talk about what's really going on here. Now, I'm not saying that there aren't certain businesses, especially the ones that are catering to the rich, that are doing very well right now, because that is.
You're always going to have pockets. Even in the Great Depression, people made money and there were thriving businesses.
But that
it's just overall.
But that would require people to be innovative, right, and to have be entrepreneurial, which many people aren't. They want to work for the man, and in which case happens to be most of the time the government. So we have a lot of these government jobs, people that have been there for 30, 40, 50 years, never going to change. And you know what? All that's happening is more and more money has been taken from them. The next place that it's going to be taken is from their retirement accounts. Don't think that it won't. When they need money, that's where they're going. That's where they're going. So, you know, everybody's like, oh, well, you know, it's great that we have this health insurance because now everybody has health insurance. Well, I bet you they don't feel the same way when they get their bill now. I bet you they don't.
Well, also what hasn't kicked in is they haven't seen what rationing their health care is going to be, meaning that you can't go to the doctor that you used to go to. You can only get certain treatments. You won't be able to get other elective surgeries. So that hasn't even set in yet. People are just complaining about the price of the health care. They have yet to see the quality of the health care. And also you're going to see a lot of doctors just quit and start to quit over the next few years over this. So there'll be even a worse healthcare system. So right now, no one's even focused on the quality of the healthcare. They're just focusing on the cost, but pretty soon they'll see that there's a quality and cost issue.
Yeah, and that's why you're seeing a lot of doctors actually move away from the healthcare system or, you know, insurance system itself and creating private practices built around a group of doctors that you can buy into their essentially practice. You know what I mean? Because they realize that, you know, this insurance crap is going to hurt them too. I mean, their insurance costs on the doctor side for malpractice and everything else is shooting through the roof at the same time, right? So their costs aren't going down. They're like, well, you know, I don't want to be a part of this system either. So they're creating essentially these cash systems where you don't have insurance. You pay into them, and there's a group of all doctors, which is great. I mean, it makes sense.
That's a free market solution. Look, anything is better than the combobulation that they came up with Gruber and Nancy Pelosi and the rest of them. These people never work in the private industry. At the most they know about healthcare is maybe they've been sick and they've been to the doctor, and yet they created this healthcare plan and they put all these fancy words around it. And the same with Obama. What does he know about healthcare? Well, he has experts. Gruber, what does he know? In other words, they're not talking and they're working with insurance companies and people who have a vested interest in making money. They're not talking about how to get the best care at the best price to people.
Correct.
That's not what this whole thing was about. It was a political disaster that was, you know, for the American people, but not for the special interest. And once the Democrats realize that and are willing to admit that, and then maybe something will change. But they're still clinging, you know, to the party line that this is a good thing, and, you know, they're pulling the whole, what are you against issuing health care to people who don't have it? Okay, there's other ways of getting health care to people who don't have it than creating a $1 billion website that's insecure, that doesn't work, and just takes all your details. There's better ways to do it and raises everybody's premiums by 2x. There's better ways of handling whatever issues are in health care than this. This isn't the only way. Obamacare isn't the only way you can, quote, fix the health care system.
Right.
They've actually just destroyed it.
Completely.
Totally. Just because more people have health care insurance, they could have done that, as we mentioned on a prior show. They could have just taxed everyone 1% and used that money to give out free policies to people.
Absolutely.
And not changed anything. There were so many things they could have done, even within their mindset.
Yeah. Yeah, I mean, it's funny because, we had talked about this a couple shows back when we were talking about what our own personal premiums were jumping up to. And, so basically I have to choose my new plan by December the 15th, right? And, you basically only have those three options. It's bronze, silver, gold, and they have different options as far as co-insurance and deductibles and basically all this screwy stuff that says you're going to be screwed no matter what plan you pick, right?
Right. And how do you pick it? I mean, what is it not just a matter of paying your premium?
Yeah, so there's these different options. Basically, do you want, like for a family plan, you can choose the one that has like the lowest deductible, right? Like meaning, let's just say it's $1,500 out of pocket that you have to meet each calendar year, and then that would be considered like the gold plan because it's got the lowest deductible. And I'm not an expert on this, but I've just had to pay attention to it enough that it seems like I'm becoming one. And then there's a max out of pocket though. So even though you meet your deductible, you still have co-insurance, which is like an 80-20 plan. So the insurance pays 80, you still pay 20%. So even when you meet your deductible, you still have to continue paying the co-insurance of 20%. Okay, up to a max out of pocket. Now, the max out of pocket for a family could be $10,000. So on top of paying your premiums every month, once you hit your deductible, you still then have to pay that co-insurance for, and this is just 1 year. This is a calendar year, and then it restarts every single year.
You can pay $20,000 in health insurance and a few doctor's visits, and that's it.
Absolutely.
In a year.
And I was doing the calculation. So basically, the only difference in plan is if you want it cheaper per month, if you want to take that bronze plan, which is like the low end, then you're basically going to have a lower monthly payment, but you're going to pay more in a deductible. You're going to pay more max out of pocket because it's always going to, it's a formula they use. So it's just going to get you back to the same space. They all equal to about, for a family of four, and my kids are young, me and my wife, somewhere around $20,000 per year if you were to have to use that option of exercising the insurance for your kids or for whatever else. It could be up to $20,000. Yeah, you're right. And I mean, I think that's pretty, I mean, you take that across the United States and all these families, that's a lot of money. It's a lot of money.
That's taken out of your net income, which if you're making $50,000, $60,000 a year, so you take that down to $40,000 a year or $35,000 in net income.
Yep.
If you just spent $20,000 out of your 35, you're down to 15.
And you didn't even flinch, right? You
haven't even eaten yet. You haven't put gas in the car. You haven't paid your car payment. You're going to buy a house.
Yeah, it's great.
You're going to save money for a mortgage. Come on, right. I mean, it's not going to happen.
It's great that gas prices have come down, but it still has not compensated by the same amount that the health insurance has gone up, right?
No.
So, and that's why it's funny that all these articles can come out here and say, oh, look at oil prices. I can't believe that they're so low. This is great. This means that more people are probably going to be traveling this summer. No, it doesn't. No, it doesn't.
Well, it means they might travel a little more, Ryan. Well, what's interesting is that counters their whole entire nonsense inflation is good argument. They're actually making the good argument, the correct argument, that deflation is good because when gas prices go down, people may have the opportunity to see, prices are lower, I might buy more gas. Now, they're not going to buy tremendous amounts more gas, but they certainly will buy more or think twice about buying more when the prices are lower than when they're higher, and that's the same across the board with anything. If food prices were lower, if everything were priced were lower, they might get their stimulus on demand. But instead, they're trying to create inflation to raise prices so that people buy more. Companies have sales, and they lower the price so people buy more. They don't raise the price and think people are going to buy more. But that's what the Fed is trying to do. They're worried about deflation. They should be petrified that gas prices have gone down 30%.
Yep.
No, I'm happy about that. That's a step in the right direction.
Right. And, you bring up a good point. So, like, gas prices go down, and let's say they go down 30%, then all of a sudden somebody goes to the gas pump. They're like, oh, gas is a little bit cheaper today. My car's supposed to take premium, but I've only been putting regular in it. Maybe I'll put premium in today because it's the price, you know what I mean, that it was a month ago. Maybe I can afford to put premium in the car that really only takes premium. You know what I mean? Like, it's not cheap, but they're probably not necessarily buying more gas. You know what I mean? I mean, people may drive a little bit more. But
no, the only thing you might do, and people are going to do this, everyone's going to hit the road and take the family Griswold road trip now.
Right.
that they were planning on. No, that's not going to happen. You go back and forth to work. All it means is you save $5 a tank on your weekly trip to the job.
Right.
Okay, that's good. And they'll claim that's a great benefit. And I don't disagree that it's a benefit. But it counters the argument that deflation is bad. Because if people had more money in their pockets because prices were lower, they would spend more. And then they would get their dream of increased consumer spending.
I mean,
if they want to push prices higher and you already have sales down, sales are going to go down even further if they manage to get prices to rise higher.
Right. Yeah, I mean, isn't it just basic logic that if people were making more money, if we had wage growth, right, if we had job stability and wage growth and full-time positions, Louis, not part-time positions, right, and not contracted out positions, because guess what? Those are probably the least stable positions of all because there's no tie. You're just contracted out. Your contract can end at any time, right? So there's no stability there. No stability.
They're focused on the consumer rather than the producer.
And this has been the theme for how many years now? And they keep thinking that one day they're going to wake up and everything's going to be different, right? The sun's going to shine through one day.
Tomorrow.
The interesting is that we're headed back into these winter months again, Louis. You know, where the rhetoric is going to be all about, well, looks like there was too much snow, right?
Well, there's their excuse right there. Hey,
yeah, it was
everything was going
outside.
fine, and then it got cold.
You know what? People could have got more jobs, Louis, if they would have got out of their house, but it was too cold. They couldn't even get to the interview. They couldn't get to the interview, so they couldn't take the job. And you know, this is going to continue. Like I had mentioned before, I'm a firm believer that nothing, catastrophic is going to happen on Obama's dime. And it seems as though I might get to that point, Louis, because they're continuing to push everything. We've got things that are we basically call them on this show as sideshows, right? So we had Ebola, we've got Russia, we've got Ferguson, we've got all these things that are taking place that take the limelight off of how terrible everything really is in our economy, right? How terrible it is, because we're more worried about everything else. We're worried about, the different issues that people can talk about on Facebook and Twitter for months on end, right?
Bill Cosby.
I mean,
what Obama's kids did at a turkey ceremony.
Just imagine if people took the same passion and energy that they have towards these social issues and actually cared about what's taking place politically and with the Federal Reserve and our economy, if they actually put the research and the time and effort into paying attention to what was going on there, right? Because
you don't have to. What you do is you react to what's thrown in your face, and they throw these trivial issues in your face, and because you deem the media to be somewhat important, that's what you react to. That's what you talk about.
Well,
they don't put the real issues in front of you. You have to go searching for them. Who wants to do that?
Right. Well, it's funny that you bring up, the issues that are put in front of your face. There's this article somewhere, business, etc., or something like that. The headline was, "Are the Federal Reserve's policy statements too verbose for the layman?" And they basically went through and showed how since 2010, Yellen has taken over the post of chairman. In 4 years, the 5 statements released by the Fed have had word counts of at least 800 words, falling at around 18 or 19 on the Flesch-Kincaid index. And basically what it is basically the comprehension level of these statements. Could the average Joe be able to understand what's being put out there in these statements, right? And essentially over time, these statements have become twice as long and even more difficult to understand or comprehend, right? So when they come out and they basically are doing this because they've actually said that being able to create more confusion allows for investors to basically have pause. Have pause because if they're not really certain that something's going to happen, they don't do anything with their money. They don't pull it out of the market. They don't go put it somewhere else. And so this has been going on for how long now, right? They continue this very unclear communication about what's taking place in the market. They don't really want anybody to know what they really think, because if they did that, then everybody would pull their money out of the stock market immediately. They know that they can't fix this. They know that this is on a train that's headed for disaster. It's just a matter of time before the track, it comes off the track. Or
they run out of track.
Or run out of track. Yeah, I mean, when we were doing the show on CBS and we started to kick the can down the road mantra, if you remember that, Lewis,
yep.
We were like, how long can this go?
And we said 2012.
Yeah. And, you know, we're headed into 2015, and
interest rates are, the 10-year is at 2.15.
Hold on, but we've got smart, savvy people that are on the sidelines that are waiting for deals in the spring of 2015. That's what we really have, Lewis. Don't forget that. These people that are sitting on the sidelines, they're waiting to buy their plasma TV. They're waiting to buy their dream home, okay, in early spring of 2015. That's when it's all going to happen.
The economy's recovering. It all happens then. And then when it doesn't happen, well, we can't raise rates. You know, it's data dependent. We always said that. That's what's going to happen.
So, you know, now that we have, like, we know where we're at, when is your expectation? Obviously, the Fed, they're going to have to start the language of the QE infinity is starting back up at some point, right? Do you think that we get through all of 2015 before they start that?
No. Here's what's going to happen, in my view. You already got Japan, who's gone off the rails, and the Japanese central bank is buying every last bond that's issued. There's absolutely no demand for Japanese bonds. Europe already has negative interest rates. Europe is now looking to do its own QE. They're talking about doing asset purchase, foreign debt purchases. They'll probably buy U.S. Treasury bonds. They'll probably buy equities. They talked about buying gold. They will buy anything that's not nailed down. And then what will happen is Switzerland, to save our Swiss gold issue into this mix, Switzerland now is going to have to, in order to make sure the franc doesn't appreciate, they're going to have to print francs to buy euros, because once the ECB engages in its own QE and asset purchases, the euro is going to get weaker. That's what they want. They're going to start chasing the Japanese down the chute. Well, then Switzerland has to do the same thing. Now what do you got? You got Japan. You got Switzerland, which is supposed to be a safe haven currency, which no longer is because it has to track and buy euro-denominated debt to keep its currency higher. So you got the euro, you got the Japanese yen, the Swiss franc, all being debased. And what does that mean? Well, debased versus the dollar. The dollar will get stronger and stronger to the point where it'll be ridiculous, and that will create deflation. That will create a situation where Yellen will have to come out and cry uncle, pretend like she never knew this could happen, talk about not raising rates. They'll push that off the table. They'll stop talking about that, and then they'll have to announce that it's just out of hand, and they're going to have to go along with everybody else. They're not going to allow Japan and Europe and Switzerland to debase and to do stimulus and allow the dollar to remain the strongest currency by far. That'll just destroy the economy. So that's going to happen in mid-2015. The time period for which they're saying they're going to raise interest rates, mid-2015, that's the time period that they will announce a next round of asset purchases. They won't necessarily call it QE, but that's what they're going to do.
Right. It's some 3 or 4 letter.
Right. And the reason the Save Our Swiss Gold thing I think is good for gold that it was rejected is had they passed it, the referendum got shot down 80% to 20%. What it was intended to do was to give put restraints on the Swiss National Bank so that they would have to have 20% of their reserves in gold. They could never sell their gold, and they would have to repatriate their gold that they had around the world. Now, the reason that's important is the Swiss National Bank has a large balance sheet because what it's been doing the last couple of years in order to make sure that the franc doesn't appreciate too high is it prints francs out of thin air and buys European sovereign debt to put on its balance sheet. And when they do that, that has the impact of driving the French franc lower, which means that the Swiss National Bank and the Swiss people are subsidizing the profligacy of European debt spending because the Swiss National Bank buys it. Now, had they had to keep 20% of their reserves in gold, they probably have to curtail their money printing to buy francs, and they'd have to start perhaps even selling euros in order to purchase gold to get the reserve requirement up from 7% up to 20%. If that happened, that would impose some type of discipline because it would mean that Europe wouldn't have a ready buyer in the Swiss. So Europe couldn't just go as crazy as they want because they wouldn't have the Swiss backing them up because the United States isn't buying anything right now. And that would impose some discipline on Europe and Switzerland. Well, now that that's gone, basically the Swiss can do whatever they want. The Swiss National Bank can go along when Europe decides to do its form of QE. Switzerland can't just sit back and let Europe debase its currency. Switzerland's going to have to jump in and start buying assets with money printed out of thin air to make sure that its currency doesn't rise vis-a-vis the euro. Well, that's the same situation the United States is going to be in. If Switzerland, Europe, and Japan are debasing at a furious rate and the United States isn't, they're going to have to join that party too. So the reason all this is good for gold is it's basically had this Save Our Swiss Gold referendum passed, there would have been some restraint, not just on Switzerland, but on Europe, and there would have been a cascading impact on the other central banks because they wouldn't have this carte blanche. And I wrote in when the news broke that this is a situation where you have they've just given the Swiss National Bank a blank check and added more toner to their printer. And that's basically what's going to happen is that the Swiss are now in a position where the Swiss National Bank, where they can do whatever they want. So that means that if you want to protect yourself against money printing by central banks, individuals have to buy gold. And I think it's kind of foolish in a way about the referendum is that individuals were asking their government, please buy gold for us, when they should just go out and buy it themselves. Because if a central bank has gold, they don't have gold. They have an option now to hold it so that they can lease it, so they can do whatever kind of manipulation with it. So it's actually better that gold, those 1,500 tons that they might have had to purchase the Swiss National Bank, are not going to be with the Swiss National Bank. Because the way the Swiss National Bank would have got that gold probably would have been by leasing it from another central bank.
Yep.
So basically, it's a good thing because if you believe the reason to hold gold is a protection against reckless central banks, well, it just got more reckless because now the Swiss National Bank has a blank check to be reckless, to buy, to print francs, to buy euros and whatever else they feel like buying, without having to have a gold reserve requirement.
Wasn't it interesting before that vote came down that the Citigroup came out and was basically, talking about how, gold is nothing, right?
He called gold a fiat currency and Bitcoin a fiat currency. First of all, a fiat currency means by order of law and decree. There is no order of law and decree on Bitcoin or gold whatsoever. He called it a 6,000-year-old bubble. That's like saying the human race is a bubble. That's just ridiculous. The universe is a bubble. Sure, everything goes up and goes down. The point is that gold has been money for 6,000 years. That's not a bubble. The bubble is in central bank printing of currency and debt.
Yep.
That's the bubble. And that bubble can never end. The difference between gold and debt is in order for a debt-based financial system to continue, it has to continue to print more and Ponzi on top of it. Gold doesn't have to do anything. It just is. And that's why it is an asset without a third-party liability. Or you don't need a guarantee. It just is.
And it's tangible. You know what I mean?
Correct.
Anybody that says that gold is some sort of fiat currency is an idiot, first off, because they're just doing that because they want to basically scare people off of buying gold, okay? Because they ultimately know that it does have value. They do. And when any of these hedge funds or big banks or anybody, these big wigs start talking and they start denouncing gold, that's when you should probably be buying it. I mean,
why did the Dutch repatriate 122 tons of gold? Because it's worthless. It's just foolish. I mean, the Citibank guy said no central bank should ever own it.
Right.
Okay, because you say so. Because you're trying to help the Swiss National Bank remain, quote, independent so they can, quote, do their job and print francs to support the ECB's reckless monetary policy.
Well, somebody should have asked the guy at Citigroup that says that it's interesting because there has never been one true fiat currency in the history of man that hasn't become extinct at some point, right? And gold is not a fiat currency at all. And the fact that they're even proposing that is ludicrous. And I think that,
he also says the cost of storage of gold and Bitcoin is high. There's no cost of storage for Bitcoin.
No. It's a virtual currency.
What's he talking about? I read like an Onion article, actually, because the first time I saw it was someone had, I guess, cut and pasted to a Google Docs, and I thought, oh, okay, well, this is a joke.
Right.
And then they said, no, I checked this is and the guy actually wrote this and put Citibank's name on it.
Once again, I guess unless you're paying attention, unless you're really watching what's taking place at the Federal Reserve and all these different countries and the markets and who's buying what, it can be quite confusing, right? And that's part of why we do this show, is to kind of try to break it down a little bit more on an elementary level for people, because there's a lot of moving parts. It's masterful manipulation throughout the world at this point. We don't have any sort of free market right now. It's mass manipulation, and it's going to continue that way because it's so far gone that there's really not much that they can do. Regardless of how many QEs they do, it's not going to fix the underlying issues. They're just dragging things.
They're not trying to fix the issue. That's what people need to realize, is that central bank, just like any entity, whether it's a person, a corporation, it has its own self-interest.
Correct.
For some reason, people think that the Fed is there to help the American people and the American economy. It's not. It's there to help its shareholders. Who are the shareholders? The too-big-to-fail banks. You can't blame them. It's just that people believe that somehow that there's altruistic governmental entity that's there to help you. They're not. They're a government-sponsored entity. They are not a government entity. And even government entities are not really there to help you eventually, because they become, the people that work there, more concerned about making sure that their agency has power so that they can retain their status and their jobs and get their salaries. So you see it in the FDA, you see it in whatever government agency it is. They're not there to help the people. They're there to gain more power for the agency.
Yeah, well, what's interesting, me being in the real estate industry myself, and I hear people talk all the time. So, I'd say maybe 5 to 10% of the actual real estate agents out there, mortgage people or anything else, actually understand what's taking place, right? What the Fed's doing, the manipulation of interest rates. But then there's this other crowd. This other crowd thinks that the Federal Reserve is great, right? They've created a low interest rate environment. It's fantastic for people to buy. Look what they've done for us, right? What they don't realize is they didn't do it for you, as you mentioned, right? They did it for themselves. They did it for the big banks. What people don't realize is that
it's an ongoing bailout for the banks to keep interest rates low.
Absolutely, but on this bigger
and
scale,
to buy that mortgage-backed security stuff, toxic assets off their balance sheet.
Right, but on the largest scale, it's a bailout for them, right, to keep them from folding, from going bankrupt. But is anybody doing anything for you? Are they giving you money to prevent you from going bankrupt? No, they're not.
They'd only give you money if you're going to buy something from them.
Correct. And that's
which is the same as giving themselves money.
And not to mention that there's all these businesses out there, small businesses and the like, that would love to borrow money from these banks. But guess what, guys? They don't want to give you money. You know why they don't want to give you money? Because they'd rather reinvest it in the stock market, where they know they have protection by the Federal Reserve to bail them out again, and to go along with the manipulation that's been taking place for so long that they just have to continue to go with the narrative. The narrative is whatever the Fed wants them to do, essentially, right?
And they make more money in the stock market than they would lending money to you.
But the one thing that people pay the most attention to is what, Louis? The stock market, right? They automatically assume, just by looking at a number, and the association in people's brain is, if it's a high number, that things must be doing well. If it's a low number, that means everything's hit the tank, right? And that's that.
Same with home prices.
The same with home prices. We have high home prices and low home prices. You basically make a determination right then and there whether we have a good market or a bad market. Now, one would think that in a low interest rate environment, we would have these rising prices. And we did for some time, but that was investors. That was institutional buying. That wasn't the everyday average Joe going out there and buying houses. And I think that the market has been so investor saturated that, people aren't willing to look through that and actually see what's there on the other side. The regular everyday person doesn't have a job. They can't afford to pay their credit cards. They can't afford to pay their student loans, their auto loans, all the other things we mentioned, their health care costs. The last thing that they're actually thinking is buying a home. Now, why are we seeing an increase in renters? Exactly for that reason. They can't afford a home. So then everybody's going to say, you know what? No, these people, they saw what happened to their parents, and they don't want to buy. They have a bad taste in their mouth. No. What they're doing is they're teaming up with 2 or 3 other people to go rent an apartment for $2,000. Not one person. Not one person's renting that place. I mean, and you know what? Sure, you can look through these rose-colored glasses and interpret whatever you want from it, but we don't have we don't have any wage growth at all. We have jobs that are basically non-existent is the word that I would use. I don't care what they say. Part-time jobs, if you want to count part-time jobs, they seem to be up, but that's just another way for people to skirt the rules and having to pay health insurance, jobs that are contracted out. And who ultimately benefits from situations like this? The rich do. They get richer. The middle class, they go down. They go, headed towards the lower class at this point.
And you know why they like that? Because if people in the middle class can't take care of themselves, who do they run to?
Of course.
They run to the government. And when they have run to the government, you have political power, and that's what they want.
Absolutely.
They don't want more people to have more money. They want fewer people to have more money. They want more people to have less money.
So what do you think is going to happen in the next election then, Louis, when we know that this entitlement culture is going to continue? We know that it's going to happen through the next election. People are going to be scared out of their mind that they're going to lose their entitlement. And the Republicans on the other side are not going to be smart enough to come out and say, hey, look, we're going to double down on your entitlements.
No, they'll run Jeb Bush against Hillary Clinton and nothing will change.
Right.
Jeb Bush isn't going to, no one even knows his politics, but if they were of any type of ideological bent, you would have heard them already. So basically, they're going to be the same statist nonsense where the government's going to do whatever government can do, it will do. And That's what Hillary Clinton is the same way. Both of them are probably in favor of more wars, more welfare, more government intervention, and you'll get one of the two. And really, you shouldn't expect change at the national level anyway through a president, because the president, all the president can do is really do harm. He really can't effectuate positive change other than as a figurehead, because the real change in a functioning democratic republic occurs at the local level.
Correct.
And all the federal government is supposed to do is be there in case it needs to enforce constitutional issues that might have happened at the state level. Yep. Not there to dictate policy, but the Americans have been brainwashed to believe that there is a national policy, a federal policy, and everything, and to put country first and not local and state first. Yep. It's supposed to be you put local and state first, and then the federal government is supposed to act as an arbiter if there's some kind of dispute in interstate commerce or if your state violates your constitutional rights. The federal government, the national government, was never supposed to set drug policy. It was only supposed to maybe build interstate roads, run the post office, and provide for the defense. The rest of the societal government that people wanted or needed was to happen at the local and state level.
Right.
But we put too much faith in that, and into one person. We've devolved all that power of running a country into one person. That's crazy.
Well, once again, it's the propaganda.
Because it can only be a dictator.
Yeah.
And it's got nothing to do with the individual. It's like you can't give one person and hope and dreams in one person that he's going to fix things or she's going to fix things.
Well, what did we talk about on the other show about what was going to happen with the Republicans and how they handled, basically Obama, basically forcing the immigration thing? What did we say was going to happen?
They complained for a week on Twitter and Facebook, and then they stopped complaining.
Yeah, that's it. I don't even think we barely got a week out of it, Louis.
No.
And everybody.
I think after we made fun of it, the next day, not because we made fun of it, you didn't see any more. This will not stand, or we will tweet on the beaches. And we haven't seen anything from these guys.
Nope.
Now they're probably saying if someone would ask them, "We're waiting till we have a majority in January." Yeah, okay, and you're waiting till 2016 until you have a president. They're not going to do anything.
We're waiting until the year 3000 to pass a budget. We're waiting
Yeah.
till,
Remember,
you know
we're in a 6,000-year budget bubble, so we've got plenty of time.
Right. It is. And, and I think at the end of the day, Lewis, it is kind of what you said. It's like you can't really worry about what takes place on the federal level. You can only worry about what you're doing, where you're at, the local.
In your house?
Exactly, in your house. And, all this other stuff that's going on in the background, you pay attention to be educated and to be able to make some decisions. Like, obviously any decision you make, you'd be basing it upon, what the Fed's doing, right? And how that could affect you or what are you looking to grow and expand a business? Well, what's your plan for doing that? I think the first place you should start is figuring out if you can get capital for it. Where people have gotten really smart over a period of time, this crowdfunding, crowdsourcing, and not having to go to banks anymore, and finding that people are willing to finance and fund these deals outside of that. It's just you have to be more creative and innovative in markets like this, because you have to look outside of what they're telling you, right? You always do. I had a real estate client not too long ago. I said, it was a self-employed guy. I said, I can't get a loan. I've been everywhere. I said, well, you just haven't looked in the right spots. I said, there's some hard money guy. There's a private guy that will lend you money. Will it be a little bit more? Yes. But guess what? If he can get a fixed rate of return at 6% right now, and he can lock that in for 30 years, there's people out there that will do that. They'll do that. Now, you have to get a little bit creative. You have to, and this is more of a relationships and contacts. You have to be able to be working professionals that align themselves with other professionals that can give you these type of options.
Right.
He was able to actually secure a loan at 70% loan to values. He had to put 30% down, but that was self-employed, and he didn't have to show tax returns and all that. Pulled his credit. He had good credit scores. He had reserves. Put 30% down. It was done deal. Private money, right? So these things take place, but remember, the media is not going to pick up on these things. These are these stuff that's on the outside, and Fannie Mae and Freddie Mac is not going to come up with a loan like that. Although I have seen that the lending guidelines have been loosening and loosening and loosening, and there's really the only reason that they have to do that is because these banks need to make money in their mortgage departments. When they're losing money,
well, they're firing people too. The mortgage in parts of the banks are probably the least profitable now.
Know,
the mortgage volume is down, and your spread is down too because of the low rates.
Absolutely. Who really wants to make 3 to 4%, right? Especially when they know that they can potentially invest that in a market to make 6 to 10, right? It's not worth it. That means that they're reliant on somebody to pay them back who they basically know potentially can lose their job. Right? They
that the house value will retain its value over the next 5 years.
Which I think everybody knows the direction of values at this point. But, yeah, at the end of the day, worry about your own house. I think that's about, the best that you can do. We'll continue to bringing this show each and every week, dissecting the news that's taking place, the things on the economic calendar. We didn't dive too deep into those today, but obviously, we had enough to talk about with just the awesome retail sales that we had. We'll obviously continue to monitor that through Christmas time, but I don't expect anything to really change there.
Well, that was over the big 2 days, weren't they, Ryan? That's the whole harbinger of the retail season. Well, I think it's like 60% of all of the holiday money is spent on this 2 days, and I think it's something like 20. I'm just off the top of my head. It's an astounding number of total retail sales. So you miss those couple of days. Yeah. You actually could miss your year.
Like that could basically mean you might shut down.
Yeah.
You know what I mean? Like that could shut your business down having a miss during this holiday period when you're expecting there to be this huge influx of sales. So,
right.
And you and I have talked to, ad nauseum about all the other big corporations that were already losing money to begin with for when it is holiday season, right? So, things are definitely not as rosy as everybody's making them out to be. I will tell you, just like we say each and every show, if you are able to secure a mortgage at a low fixed rate, then by all means do so if you're in a position to. Don't do it because somebody's telling you that you have to take advantage of low interest rates and they're going to go up because, that's common sense. We've had interest rates in a low range for an extended period of time now. I think if people were actually able to, they would take advantage of them at this point. I don't think that it's anything other than they just don't have the ability to.
Right.
And don't knock yourself for feeling like, I want to be able to buy. The only thing you can do is to pretend like interest rates are going to stay low for another 2 years and try to put yourself in a position that you may be able to capitalize on them. Let's just say you can't get them at 3.5%, but you can get them at 5%. That's where they're at 2 years from now. I'm just making these numbers up. It's still historically low. And if you're below 6%, it's a good deal. You're still protecting yourself from future inflation. Don't worry about values of homes. Remember, you're protecting your housing costs. I think people get so wrapped up and they want a great deal. Who cares if you buy something at $200,000 and you think it's a fixer-up and it's going to be worth $350 next year? Because what happens if it goes backwards and it's worth $150? You guessed wrong. Nobody can time the market perfectly. I think that's happened throughout history. You get one or two people that get lucky, they get talked about, but most people can't do that. They're not smart enough to be able to buy a home when everything's rising up, sell it, make all their money, and then turn around and rent a property on the other side so they don't take a loss, right? That would take some amazing vision, and most people don't have that in order to prevent themselves from having losses. So protecting yourself from future inflation with low interest rate environment, if you are willing and able, that's the key two things there. Now, if you're in a position that you're making a lot of money and you're self-employed and nobody wants to give you a loan because you're self-employed and you have to show tax returns and there's some options out there. There are some private investors and people that are still lending money to these type of people. But you just need to know professionals that can point you in the right direction. Anybody that's out there that has, one of these types of situations, just you can, go on the website at realestate360live.com. On the right-hand side, just click Ask the Question. I'd be glad to point you in the right direction if I can. Any question you have, if I don't know the answer, I'll find it for you. There's somebody that I know that will know the answer. Louis, I appreciate you for coming on again. If you wouldn't mind giving our listeners your blog so they can check that out.
Sure. Smallgold.com, SMAULGLD.com. Please check it out for information and news and analysis on the Federal Reserve, real estate, and the gold and silver markets.
Thanks, Louis. Appreciate it.
Thank you, Ryan.
Thank you guys for tuning in. Please download, subscribe, share on iTunes. Real Estate 360. Also, you can stream it live at realestate360live.com. Take care, guys. Until next time.